If you're a potential or existing homeowner wondering what the housing market has in store in 2023, you're not alone. Home prices are on the rise across the country. It's understandable to be curious about what the future holds because things are clearly a little bit uncertain. One thing to consider is whether or not it's the right time for you to buy, continue renting, or renovate your current home. I still see big lines at Home Depot. Now, while the decision ultimately depends on your personal circumstances, your financial goals and all of that, it can be helpful to understand, what the current state of the market is and what may be on the horizon. So, as I mentioned, existing home sales have been on the decline for the past 10 months. As of November, they were down more than 35% from the previous year. However, despite the drop in sales, home prices have increased because of the inventory shortage. So the median home price for all housing types was around $370,000, and that's up from $358,000. And this is from November 2021 to November 2022. They're still collecting data for the past few months. So what's behind this trend of these declining sales and these risky prices? Well, one thing to consider is the impact that the pandemic has had on the housing market, and a lot of people working from home and demanding large living spaces. That increased. So home prices saw a huge uptick, right? This trend was further exacerbated by low inventory levels as sellers chose to kind of wait out the uncertainty of the pandemic before putting their house on the market. But now as we look ahead to 2023, we have to consider what happened in the latter half of 2022. Now, during this time, we saw home prices start to come down due to, interest rates. So that combination of sky-high home appreciation from the pandemic and higher interest rates created an affordability crisis, and it set the stage for what's likely to happen in 2023. So there's two potential paths that the housing market could take in this upcoming year. First one is that we go into a recession, which would add a third factor to home prices, job security. See, with a recession, there may be fewer buyers in the market, particularly those with less secure jobs. This could lead to a situation where there aren't enough buyers to sustain current home prices, okay? The second potential path is what we continue to carefully control, inflation. And the Federal Reserve is closely monitoring these damn interest rates, right? So in this scenario, we may not have to worry about a recession and job security, but home prices may still need to come down due to the fact that interest rates are really, really unlikely to return to that 3 to 3.5% range. So for buyers that enter the market, home prices may need to decline a little bit further, right? If you are a potential home buyer, there's a few things you may want to consider as you navigate the market in 2023. One option is look for motivated sellers who may be willing to negotiate on price. These could include iBuyers or developers who may be feeling the pressure to sell due to rising labor costs, construction costs, all those kinds of things. Additionally, you may want to pay close attention to the state of the economy and any indicators of potential recession. Now, it's also worth noting that while the national housing market trends can be informative, it's important to keep in mind that the market can vary from one region to another. All right, so what's happening in New York, for example, may be very different from what's happening in DC or rural Colorado or California or Detroit. So as you make your decision about the housing market, it can be helpful to consider local market trends and conditions in addition to the national picture. So you got to keep your finger on the pulse of what's happening here if you're in DC or Maryland or Virginia, wherever you are. You really got to look at your individual market and stay connected with what's happening there. Ultimately, the decision of whether to buy, continue renting, or renovate your current home is a personal one, and it truly depends on your circumstances and your goals. I want to make sure that you have good information so that you can make good decisions. For me, I think that the best thing that you can do is get an accurate calculation of what the pros and cons, what are the real benefits of you having a rental property, a property that you rent right now, right? And where that money is going, what that money does for you at the end of the year. Now we're talking about taxes versus what happens if you have a property that you have purchased. So what does that look like from a 3-year perspective? What does that look like from a 5-year perspective? What does that look like from a 10-year perspective? So one thing that we know is because of the fact that the affordability is shrinking, the affordability is shrinking, and the fact that the Home prices are not going down yet. Again, depends on who you ask. We have 2 to 4 million homes short of enough to sustain the supply. So that means that in order to accurately fulfill the current demand for housing, even with the current state of the economy, even with the interest rates being what they are, there are still not enough homes to meet the demand. We're still short 2 to 4 million homes, depending on who you ask. So if we're short that many homes, you're still not going to see these massive price reductions that people think are going to be happening across the board. Now, I do have homes. We have homes in our market that have had $15,000, $20,000, $25,000, $50,000 price reductions. But those homes came on the market in times when people were still facing sticker shock, right? When the interest rates hit 7% and they started to slowly trickle down into the sixes. Also, if you bring a house out during the holidays here, anytime between November and December, you're really rolling the dice. So as we're at the beginning of January, as you're watching this video, going into what's really the winter, you may hear wind howling behind me, or as we get into the spring, I expect things to be a little bit different. Do not plan to see a house hit the market on March 29th and then wait for that bad boy to drop by 10% before you make an offer, because it may be gone. Why might it be gone? Because people have leases that are going to end, and somebody might want to buy a house. Depending on what the job market is like in your area, somebody may need to move somewhere, okay? Somebody may be tired of renting and want to reap the benefits from owning a home. So it's not like everybody's just going to stop doing things across the board. Homes still sell. But is it going to be an amazing market? Hard to say. I just want to make sure that you know that when people say, the crash is coming, don't listen to that, okay? Get the data, analyze the data, talk to people, look at your individual situation. Think about where you want to be 2, 3, and 5 years from now. Maybe you can benefit from getting a house while you can still get a good deal. Maybe you can do a refi. Maybe you can take advantage of one of these, buy it now, and then a couple of years from now when the rates go down, do the refinance. We have some lenders that are doing that. You just have to, you got to put in a little bit of work, okay? It's not as easy as it used to be. But you can get a damn good deal on some of these houses right now. That may not be the case 2 or 3 months from now, but I'll get into that later. The point is, don't believe everything that you hear about this market, because a lot of people are lying to you. That's all I'm saying. If you found any of this helpful, if you have an idea of where you think the market is headed, I'd love to hear about it. Drop us a comment. Tell me what you think. Okay? Have you recently bought a home? Did you get an amazing deal? Tell us a little story. We don't mind. Like the video, share the information. It's not woe is me. It's a real market with real people. Things are okay. Don't believe you know who's. We won't name the names. All right? Subscribe. We got more coming. Take care. See you next time.